If you are a startup founder planning to start something of your own, this video is very important for you. And it is the first video of the tutorial where we will be discussing about various entity types and how you should choose one of them. So guys, my name is Mike Vadera. I'm a chartered accountant, started my chartered accountancy back in 2007, qualified in 2011. And from last 13 years, I'm serving various government initiatives like MCA21, GSTN, worked with EY as a product manager, developing their platforms. Also, from last 7 years, I'm working with founders like you. And I've helped almost 4,000 plus startups in setting up their business. And not only that, I'm helping them out in creating their growth funnel, doing business automations for various SME, including some 4-star hotels. So I am the right person to guide you on this. Hope you will be benefited through whatever information I'll be sharing with you. So let's start the information that you as a new founder should have. So there are 5 important things that you should keep into mind while starting your startup. So the first one is that you need to take into consideration that the taxation aspect. So taxation is a very important aspect when you're starting your startup. See, if you start as a sole proprietor, it is nothing but it is something which is going to be added in your individual income itself. Then if you start as a private limited company, then it's definitely a separate entity. Tax rates are lesser as comparison to a limited liability partnership. Now, if once you decide that how much tax you want to pay, in which slab you want to fall, then the second important criteria is that you need to check whether you want to bear the personal liabilities. In case of a sole proprietorship, you are yourself liable, while in case of LLP or a private limited formation, you are not liable for the things that your business is doing. For example, your business has done some work for a client. Now the client has filed a suit against you for incompetence, or maybe that client has got into some trouble due to work that you have done. Maybe the structure of an architectural firm design that you have created as an architecture firm. Now in that case, you will not be personally liable if you are a private limited company or a limited liability partnership. Although in case if you are working as a sole proprietor, you will be fully personally liable. Now there are other options of indemnifying this loss that we can talk in some other day. But the main thing is that you need to check the liability aspect also, which is the second most important criteria after taxation. Third aspect is that you have to see that regulatory compliance requirements are how much. So in case you are starting as a sole proprietor, you might have taken a GST registration, or you might take a trade license or a MSME registration. Compliances are not that much because individual ITR, along with that, you can file your business related income as well. But at the same time, if you start a private limited company or a limited liability partnership, in that case, transactions, depending upon the transactions, the things will not be there. But depending upon the type of entity you choose, like if you choose the private limited company, then mandatory statutory audit compliances have to be done on monthly, quarterly, annually basis. Board meetings have to be held, minutes of meetings to be created, director responsibility statement, and a lot of other documentations like auditor report, filing the same in various forms like AOC 4, MGT 7, 7A as the case may be, to the annual returns, reporting the MSME related information if you have delayed in payment to any MSME, reporting the DPD3 for the deposit. So these regulatory compliance have to be kept in mind while choosing the entity structure. But when I am saying the regulatory compliance, so you have to keep this important point that is coming now, which is funding. If you want to go for funding as a sole proprietor, you will not get any funding in the sole proprietorship, while in a private limited company, there are very high chances. So private limited company, though comes with the regulatory compliance requirement, is a very good option for the funding aspect. Now comes the fifth aspect, which is the management and control. Now management and control, in your particular case, you have to see whether you want to keep the management and control of the entity centered to a particular individual, or you want to create a board of directors kind of a structure, create second line of leaders. So accordingly, you have to decide that if you are forming a private limited company, you can definitely create second line of leaders. You can give ESOPs to your employees, and there are lots and lots of benefit of management and control, and scaling a private limited company is much better. While if you don't want to scale your business, you want to do as a corporate startup or even as a small startup, there is no harm in that. You can definitely do as a solo founder. You can do it in a sole proprietorship as well. So it totally depends on your aspirations that how you want to do it. Okay. So in the next video, I'll be talking about various options in detail.